Hey traders, what's going on? Jamie Setley here. It is February 27th. Tomorrow's the last day of the month, short month with February, of course. And welcome to the Midweek Strategy webinar. So before we dive in, let me know that you can hear me and that you can see the screen. Test, test, test. Can you guys hear me? Can you see the screen? Yes, Ziad. All right, great. All right, so we're going to start DXY. This kind of highlights, I think, the important level that we're at in Euro specifically. You can see that we're riding right on support line. So you just draw the channel from the Fed low of last year. Okay, and that was obviously the low for all of 2018. And we've got the 25 line acting as support, right? Essentially, we've been between the 25 line and the median line since January 9th, okay? Support, resistance, support, resistance, and now we're back at support. So when I saw that this morning, the fact that we weren't breaking through it, that's why I was like, screw this with the euro, and still wanted to have the possibility of, partaking in euro strength, considering that it was holding or is holding above the high volume level at 1373. So hence throwing in euro CAD instead. Okay, it's a really tight stop. You're looking at, we'll look at the setup itself here in a second, but it's just it's a decent setup, right? Good potential there. Dollar CAD back down at support. Euro CAD with all the longer term possible basing reversal characteristics. So we'll look at that in a bit. But let's just highlight the fact that you do have the dollar right here on the support level. And I think, look, if we look at it in this manner, I'm looking for this to break eventually to the downside. Do have a three-wave rally. Okay, you do have kind of what's looking like an impulse to the downside, but at the same time, we still haven't broken down. All right, so we're still sitting on support, and that's kind of the most important thing here. So until that happens, you have to be, I guess, somewhat skeptical / careful of getting another bounce in the dollar from down here, right? And this would pertain primarily, of course, to euro, right? See if we can get a bearish channel or something. See what that's looking like. Could have something to work with there at some point. Two ways to look at this. Either, you look for another bounce here and resistance up here around 96.60, or if you break down, then you'd be looking for resistance back on the center line here / the underside of the 25 line, which has been support. Okay, so we're sitting at a kind of a critical spot right here on a short-term basis in DXY. Okay, all right, let's go to US dollar now. All right, US dollar is also, remember the big level that we had talked about being basically a 12,160. Well, we're kind of at it, right? So 200-day, 618, and November low. You'd probably, I'd actually say that The more important level here is going to be down at the median line. Again, same thing that we did here with just have the channel back from the 2018 lows. In this index, the low was January last year, not February. And you can see the center line support, 75 line resistance, prior support. And we're looking at this as kind of 12,1, call it 12,115 or so would be the big spot for a break at that, on this spot. So that is where focus is for US dollar. If we zoom in here, from a wave count perspective, you could actually make a little more of a bullish argument here because you have an impulse up and potentially 3 waves down. Okay, so how that all plays into this, I'm not quite sure because frankly, you've got this offsetting, you've got pound dollar offsetting kind of the weakness in the Australian dollar. Dollar yen's been just a big fat nothing for a while. Right, smallest range since 1997 last week on a weekly basis. And, this might be something where we look at the Australian dollar to potentially play some strength out of this. Okay, so we'll look at that. So you need to know from the two indices, the $2 indices that we're looking at, is that we're kind of at big spots, right? DXY is sitting right on parallel support, while US dollar is sitting right at a big level at 12,160, right? We're currently 12,155. I mean, it's a huge spot, right? 200-day, 618, all that stuff. All right, so ending February with kind of the dollar sitting at kind of make or break levels is what we call it. All right, we're going to switch gears. Instead of looking at euro first, we're actually going to look at the British pound. And we're going to step back and look at a weekly chart of the pound. So big break higher, okay, here, head and shoulders with kind of an abbreviated right shoulder. The setup, as I said last night, really comes on a retest, I think, of about 131.60, 131.75, something like that over here, but really it's the 50-week average, this black average that you want to look at. So just look at some of the big trending moves that we've seen over the last couple of years. So in 2017, all right, you broke above it, you ended up coming back and testing it. It did take a couple of months, right, since you broke above it, right? 1, 2, 3, 4, 5, 6, 7, 8. So 8 weeks, 2 months. And then we, kind of went on our way in a choppy uptrend. All right. When it comes to the move last year, it was a little quicker, right? The big down move, you broke the 50-week average. You actually came up and tested it as resistance, okay? And that was just 2 weeks later. So maybe we could look at something like this to happen. But yeah, it's also this neckline here, okay? That's what I would consider the neckline for this pattern. And we'll be looking for, at some point, we'll be looking for a retest of this level, again, 3160, 3175 in the coming weeks, okay? So where might we pull back from potentially? One, you already have a breakout, so fading this might be a bit dangerous, but 3360, okay, is going to be the high from July of last year. Just about hit that today. Today's high is 3351 so far. Probably get into it at some point. And then, that's the first spot to pay attention to. We can zoom in on some shorter term charts. We might get a better handle of where this pullback could occur. So I'm going to bring in this chart right here. Okay. All right. So apologies for this is a bit sloppy, but So there's that high right there from July that I was talking about, right? That's the 33.63 level. If you look at the very short term channel that we have, okay, right here. So this is going back to the low from 214 from Valentine's Day, and you can see that we do have a very short-term sharp channel, if you will, and the upper parallel for that would be something to watch, and it's going to be just above that 3360 area, right? So that's a level to pay attention to. If you do get maybe, you know, something of a reversal off of that, well, hold on for a second. If you do get something of a short-term reversal off of that, okay, then I'd be looking at potentially a pullback. 1 second, hold on for a second. I'm having an issue over here. Hold on, I'm sorry. All right, sorry about that. Okay, so this would be a level to pay attention to, right? Just this very short-term channel. And again, from a shorter-term basis on a buy point pullback, I would just watch this short-term channel for support as well, which of course is also the bigger median line, which you can see crossing through here on this chart that I have zoomed into, okay? So an extended pound rally, again, not really willing to necessarily fade this move right now, but would be aware of 3360 for reaction if you're looking to scalp off of maybe just a short-term pullback or something like that, okay? All right, so that's cable. Dollar yen is looking very triangle-like right now. And I had a different, we had a different slope that I was showing yesterday. I just want to show you guys how this was drawn in. All right, so we've got, remember we were working off an hourly close slope last time, but what we're looking at here is we're drawing it off of the daily low. So not the flash crash daily low, but this daily low, okay? The next daily low. We're just drawing the channel off of that. That actually seemed to be a better channel. So you zoom into a near-term chart, you can see it right here, okay? So it's actually off of this low over here. Where is that? 1.3, 1.3, 1.3. It's that low right there. So it's actually right there. All right. And you can see that the support today hit right on that center line. To me, this is taking the shape, it's either a triangle or a flat, okay? In which case you completed a flat here, A, 3 up, B, down, and C, 5 down, and then you're about to go to the upside pretty hard. Couple ways to play this. Obviously, you're looking at the long side. We're looking at potentially some sort of maybe a pause here, either in, if it's part of a triangle, okay, then you're looking at this being A, B, C, expanded triangle, right, D, and then pull back E, and then higher. If it's just an impulse, and we completed a flat, which is actually looking more likely given what this move looks like, then you actually want to buy a pullback, probably back to 110, you know, 110.70 or so, okay? So somewhere over here. So that's a possibility as well. Now, if we go and, you know, don't forget about the bigger picture on this dollar yen, we got to remember that we are getting up into kind of some, call it contentious levels, if you will. Okay, we've got the low here from October at 111.37, right? The high on 12.26 is 111.43. The 20-week average is just there too, as is the 200-day average. That 20-week average is really good support throughout last year, and it's downward sloping, so we should probably be looking at it as resistance or potential resistance for this year, okay? So when it comes to dollar yen, you're looking at near term, like very short term, next day or two, potentially buying a pullback in that 110.70 region. But then, being quick to pay attention to any new highs, especially up near 1140, because that could be resistance for a more important top and yet another false break. Okay. All right. Let's go to commodity currencies. Kiwi, very close to resistance. We failed right in front of it. Remember, we were looking at 69.19 as potentially a point for a top within this, what I think is a triangle, right? An A, B, C, D, okay, pullback E, and then we'd be looking for support down here. That's maybe trying to get a little too cute and predicting what may happen, but I would just leave it at, with this big drop we have today, it might be enough to say that you've already got your next high of sorts in place. Okay, so if we kind of zoom into an hourly chart, markets dropping in an impulsive manner. Weekly open up here is 68.60, right? Former low 68.70. I would be looking at 68.60, 68.70 as potential resistance to take this lower initially down towards basically 68, which on the daily chart you can see it's a little cleaner. All right, 50-day average. Might be able to go a little bit lower to the 200-day at 67.50, but bottom line is 68, 60, 70 resistance for a move back down towards range lows. Okay. Australian dollar. Daily chart, bearish outside day. Would be looking back at 71.50.60 for resistance to take this potentially back towards that level that we were thinking about before, where we were going to get two legs down, right, to the 69.64 area. It just seemed kind of all wrong when we were looking at it before yesterday. So now we're getting evidence that we might actually have a top in. So I'll be looking at this is a trade that I would probably be doing. Probably won't be doing the Kiwi one. This is just a better setup in terms of reward to risk, in my opinion, right? Looking at 71.50.60 for resistance. 71.50, by the way, was that high volume level, and it still is. You can see right here, that was the high volume level from last week. That was the employment report. So that could come into play for resistance again, okay? So that's probably a trade to do for the last day of February here. Dollar CAD. Oscillating between the 2018 trend line, slope line of this entire, if you look at it this way, it's really quite clean. This is the 2017 low, 2018 low, channel off of that, and then you've got your slope lines in between it, which we've been oscillating between. Ty saying, can I get the Euro chart again that you just had up? Euro chart. I don't think we even looked at one. You mean this one right here? I haven't even gone over Euro yet. I will go over it in just a sec. Okay, Ty? So yeah, with dollar CAD, pattern-wise, not too sure what's going on here. You do have three waves down. This has an impulsive look. This is, if that's the case, this is just a really deep retracement and might have simply, just basically looking higher off of this. That's why I kind of like the Euro CAD idea. But yeah, well, this, we could have a dollar CAD long as well, but I just don't have the setup for entry at this point. Aussie certainly has the setup for entry at this point, back at 71, 50, 60, but I don't see it just yet for dollar CAD. Okay, but bottom line is you're at support and you continue to bounce along this very well-defined level that is 31, 31.25 monthly open. Month ends tomorrow, and we are unchanged for the month. That sounds about right for this market. Okay. All right, let's go into Euro now. Here, Ty, this is the 4-hour chart of Euro that we were looking at. Okay. I assume that this is the one that you were thinking of, that you saw. So let me know when you get that picture so that I can move on. Got it. Okay, great. So I can, like I said this morning on Twitter, I can still see this potentially working out, Euro on the upside, okay? It's just that confidence in it right now is just so low. Like, you get the entry, right? We got the entry overnight. Market immediately moves up, right? You get a European low on the open, European open. Market immediately moves up to 114, so up 30 pips. Okay, great. Now in a normal, I shouldn't say normal because frankly, what is normal? But in a trade in a market environment where it's good trading, right? You'd be looking for this to just continue and extend higher and hit our target at 1450, and then kind of see what happens, right? Well, of course, this environment not going to do that for you, and instead we pull right back to the what I'd call kind of the short-term decision level, which is basically 1370s, and we're just stuck there. And when you have a market that's doing that, it's not really doing anything. It causes doubt, and it's just very difficult to kind of stay with that trade. I don't like markets that make you sit there and question what's happening. I like to hit the entry and then it gets moving. That's the style. That's how I trade. Okay. And then it gets moving on its way, and then you're free to sit there with a risk-free trade or whatever and go about your business. But in this case, it just wasn't going to happen for us. So, not too sure what the deal is here. With Euro, it could still work out. Frankly, you don't want to see us below 1345, which is yesterday's low. That to me would negate any sort of near-term bullish potential, and frankly put us back in nowhereville. I would not really have not much of a clue of what I'm looking at that point. I would just have to move on. So there's that. I did want to kind of go through and share the charts that we looked at, or that I put on the update last night. And that would be this one. Okay, so this comes from the fact that, let me pull in different workspace here. Okay. So this comes from the fact that we have, here's Euro. Okay, here's Euro. The Bollinger Band width, right? So back in 2013 to 2014, we kept hitting that upper Bollinger Band, right? So boom, 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 boom. Hit it 4 times basically over the course of, 7 months, essentially. Okay. October 2013 to May of 2014. The Bollinger Band width was extremely low up until the last couple of weeks, that was a record. We had never been that low. In other words, the market had never been that coiled before. Well, here we have it again. We're back to being coiled, if you will, to, a record amount of coilness, which sounds really silly, but it's a record low for Bollinger Band width. So, 7 months, hit that thing 4 times. The upper Bollinger Band at that point got really narrow, and then you finally got, the turn lower, and you hit the lower Bollinger Band, you bounced, and then it was, the huge euro downtrend. Okay. So fast forward, and this is we're going on 8 months now, where we've kind of hit the Bollinger Band, right? Starting in June of last year. So 1, 2, 3, 4 times, right? Didn't really hit it here, but close enough for government work. You get the idea. Okay. So this is actually a little more played out. You can see that we're at a big decision point here because we're at the 20-week average. Okay. So to me, the idea of a bigger break, right, and a bigger turn, you'd probably want to see us test basically 115, which is the upper Bollinger Band, which is just how we did it over here when we went to the lower Bollinger Band, right? And you got to bounce for, a month, and then we went down. There are, of course, other similarities. You've got all the divergence that we've talked about. You had divergence over here in 2014, although not to the extent that we had it here, of course. And, J spike on the low, which actually still is the low back in November. You had one right on the high back in May of 2014. That was Draghi, actually, ECB in May of 2014, which I remember. Okay. So you see the similarities, at least from just kind of a quick visual standpoint, right? So then we go back and we can look at, just kind of throw a analog on there. So I copied this and did a mirror image of it. Is it perfect? Of course not, but it is pretty similar. Ty says, why am I so certain it's Euro higher and DXY lower? You and Mike are insisting on it. I'm not certain at all. Whoever said I was so certain? In fact, I said I've been talking about during this entire webinar, I started off by talking about how we had the dollar actually at support, right? So we had the dollar at support. And I was actually saying that we might actually have some long setups in the dollar. So no, I'm not talking, I am not, there is one thing that I'm certain about, is that I'm not certain about anything. I have no idea which way the market's headed. I wish I knew. I wish I could predict the future. That would be awesome. But I can't. And, I just have to kind of go on risk reward and setups and all that good stuff. So anyway, here's what we've got. Okay, does this mean it's going to happen? Of course not. Okay, but if we continue up this path, and if we go to 115 and the upper Bollinger Band and pull back to the 20-day or the 20-week, all this stuff is, if we started talking about this last week, if all this stuff ends up playing out and you continue, then yeah, it'd be silly not to pay attention to it, right? So these are all just possibilities at this point, okay? I mean, it's kind of hard, like, not to recognize all of the reversal evidence that you have here. And I get it, the market has not reversed, okay? But just because it hasn't reversed yet and the euro hasn't rallied doesn't mean that it can't happen. It also doesn't mean that I guess the euro can't completely fall out of bed, okay? Not going to be just sit here and blindly be long euro. All right, so let's go to some other setups. So we looked at Euro CAD. Top of the wedge, breakout yesterday, pullback today, 618 on the low at 49.40. And at this point, I'm sitting here long with a very tight stop. So I'm long at like 49.65 with a 49.35 stop. And if we were to this breakout were to resume, you'd probably be looking up towards at least 51.40, which would be the 200-day average. Okay, it's just a setup. It might be stopped out by the time this webinar is over. I have no idea, but it is a setup that I'm, kind of interested in. Euro Aussie is another one. Potential head and shoulders bottom here. Okay, breakout over 160.40. I would target the year open. The head and shoulders target's actually 63.60, but you've got the year open at 62.65. That's where I'd be targeting that for Euro Aussie. So just a couple of, this speaks to the, I guess, the Aussie short potential that we're looking at. I do like that Aussie dollar short idea. Okay. We throw in 71.50, 71.60 shorts. You could probably get away with a really tight stop, but there's no reason to be too tight. Stop above 72 and take it down to that 69.70 area. Let's look at some indices. All right. We had this one up the other day, S&P 500 cash index. Upper parallel, 786 retrace of the entire drop. And now you've got also the highs, of course, from November and October, which actually, well, not October high, but October 17th high. And that did not take that out, but close enough. And now we've turned down. Okay, so to me, you could say that you break this short-term wedge if you get under, I'd say 27.6450 at this point, which is going to be the low from last Thursday. But then you're going to have a test at 27.50, which is the 50 and 200-day averages. Okay. So if we start to get down into this level, then I'll zoom into an hourly and see what it looks like. You'd want to see 5 waves down or something of that nature. We don't have that yet, right? At this point, it's just a 3 actually. But those are the levels that I'm paying attention to on the S&P. NASDAQ futures. This is actually a pretty good one. Let's just clean it up so you don't have all my junk on here. We'll just keep this trend line on here. So this is NASDAQ futures chart. Here's the trend line from last year, 2018 lows, February, April. Look where we came in. Also the high from last January, which is going to be more or less the high from December. And that's just where we went. In fact, that high on Monday was 71.6850. 71.64 is the December 3rd high. So we did take that out. We're back below the 200-day, at least for the time being. And this to me does not look like the most bullish chart in the world, right? Basically coming back and testing the underside of a former big support line. Now, there'll be people that argue and say, well, how can you draw this as a former support line, given the fact that you have all this trading around it? And I get that, But when it was hit initially back here on 1024, you did get a big bounce. I mean, you traded from 70 or 68.10 the next day all the way up to 7100. That's a big move. All right, so it did hold as support initially. At some point, by the way, I would expect that the 50-day average comes into play as some sort of support, wherever that may be. Who knows if we drop quickly, it's going to be closer down here. But if we kind of grind, right, then the 50-day average is going to catch up and you're going to be somewhere over here. The 50-day average has just been a key level. I mean, throughout last year, throughout, December, right? So support, then resistance, then it was actually support again once you got above it. So that'll be a big level to pay attention to at some point. Okay, so that is what we're looking at with the indices. When it comes to metals, go over here. Really the same levels that we looked at last week. So your first test for gold support is actually coming up. It's about 13.17 at this point, right? We talked about 13.13 last week, but the drop's been a little slow. So we'd be looking at potential support on this trend line. I still think that the bigger support or more important support for this is actually going to be down closer to, say, like the 12, maybe even the 1290s to 1300. So that 1290 to 1300 zone defined by a few things. One, it's the former channel top, which was precise support on January 24th. And two, 50-day average is currently there, although again, it's probably going to catch up and go a little higher. This is the 20-day average, so we're not in a confirmed rip-roaring, raging gold bull market at this point, so you probably don't expect that to hold. But zooming back, just remember where we came from. Okay, we came from the 2018 closing high, 1348.70. That's a big spot. Okay, so don't be careful trying to buy into a dip where you're coming off of really big resistance. Okay, so I would pay attention to this level. However, I'm not confident in how big of a level it is. So Pooja says maybe a larger pullback. Sure, absolutely, it could be. I'm just saying that you have, the makings of a larger up move. Okay, so let's pay attention to the, clear levels. And to me, 1290 to 1300 is a pretty big spot, right? That'd be a $50 to $60 pullback in gold. It's a pretty good pullback to pay attention to. Not saying that it has to be the low. I'm not saying you come back here and you have to go higher like the 1500, but because no one knows. The idea is just to identify the support or levels that could provide support, be aware of them, pay attention to them, and then act if you get the right action around them, and then place a stop and see what happens. That's kind of it, right? Yeah, and you could also have Pooja saying from the December 2018 low. Yeah, over here. That's right. So, but what is this? Is this a 1, 2, 1, 2? Okay. And then what is this? Like a 1, 2, 3, 4, 5, 6, 7, 8, 9. That's right. 9 waves up. Okay. So if this is 1, 2, 1, 2, then this is your big third, then you'd be looking for a pullback that would be about a 38.2 probably of this. And guess what? It's actually 1291. That's what we were saying anyway. It's 1290 to 1300. So maybe that 1290 is the spot, right? That would be potentially a place to really pay attention to if you got to it. Silver. similar stuff here. I'm thinking, still thinking, you actually have kind of right here where we are, you could get a little bit of a bounce. But I would just follow, I'd kind of follow this fork, right? So one thing to watch for is, talked about this last week, but on a weekly chart, you see the 10, 20 week average, 10s in green, 20s in red. So watch for the market to fall in between those two. So you're at the 10 week now. You know, if you fall in between the 10 and the 20, you know, that's going to put you about 1530, something like that. I have 1515 obviously marked as a big spot. That's the July 2017 low, as well as the July 2018 low. So July 17, July 18, that's kind of the breakout level to me, right? You can see how we kind of had a big bar through that level. So that could be a level to pay attention to, especially if you get there in several weeks, because you would have the lower parallel of the channel down there as well. And at that point, you'd probably be really close to the, you'd be very close to the 20-week average or right on it, more than likely. Okay. Oops, sorry. I just realized that I was muted while I was talking about copper. So, all right, copper, we are following the same levels that we had starting with the 2016 channel. You can see the 75 line, beautiful support back here in 2017. Good resistance back here in 2018, September last year, and just came up to it on Monday just about. Kind of thinking pullback here, and would be looking at support essentially on the old highs from September of last year. That's really where you'd want to pay attention to, at least in my opinion, okay? And maybe you get something like that too. Maybe you get a trend line on there. You know, so a nice corrective pullback would be ideal, right? I don't really want to see us tank from here over the course of one day, but you'd like to see it choppy and kind of form a flag or something like that, if this was going to stay a bigger bull. But either way, these are levels to pay attention to. Okay, energies. Remember crude, we kind of had two levels we were looking at. 58.07 was a big spot. That was the February low from last year. And then actually 54.55 for support. So we actually didn't hit either of them. So we, continue to look at essentially the same levels, especially the 58.07 level for support. That's going to be, or for resistance, excuse me. That's a big spot in my opinion, right? Big level. It's not just that level, but as we know, it's also this huge parallel, right, that goes all the way back to 1986. You can see how that was resistance last year, or not last year, in 2017, excuse me. It was also kind of support for the launch towards the end of 2017 and into 2018. Alrighty then. So that to me is all I've got. Here's an interesting chart to pay attention to as well, by the way. This is platinum. Platinum could be set up for a much larger move, bullish move over the longer haul. Okay, I'm kind of following this with two forks, one a corrective one and one just a corrective channel and one a fork. But look what we did today and where we've hit today. Big spike higher, just about tested the high from November of 2018. Did not quite get there. Tested actually the high day close of that. That would have been 876.30 and pulling back strong. I'd be looking at support anywhere between that 830 to 840 area in platinum. So we're looking at a pretty decent sized pullback here for platinum. And this has been one of the more volatile metals lately. So this might be a pretty good tell, not just for other metals, but maybe for the dollar generally. Okay. As you know, the metals tend to be the most sensitive when it comes to dollar action. So, you know, this might be the one to really watch moving forward. And that's it for me. So we do have a little bit of time. If there are any questions that you guys want to look at, any specific markets or crosses or whatever, would be happy to look at that for you. So just let me know. CAD yen, you got it, Marco. Let's take a look. Well, first thing that sticks out to me on this is simply this 200-day average. Getting awfully close to it. Thai saying euro yen, sure thing. So CAD yen getting really close to 200 average. Also, by the way, the low from November 20th, entire November low, in fact. So that looks like a big spot to pay attention to. You do have obviously kind of a break here. At some point, this might come into play as support. If we kind of zoom in though, let's go to like a 4-hour chart. This choppy uptrend to me, you know, you're kind of getting a wedge type of move here, right? So I'd be on reversal alert essentially up here at 84.60. Okay. Wondering if you can draw a channel with this too. And I wouldn't say that's all that reliable, frankly, but so here's the thing. Look for basically 84.60, pay attention to for potential resistance. If you got a reversal near 84.60, which is a level to pay attention to, I strongly believe that, would be looking for, you know, maybe a move back down towards 83 and change. That's going to be the 200 average on the 4-hour chart, which you can see has been a pretty solid trend marking level, right? Pivot. So this is going back to last October. Go back before that. And let's go to euro yen. So bottom line is pay attention to 84.60. So you do have with euro yen, you do have a really good channel, it seems like, to look at here. And kind of been, it's tightened up a bit, it looks like. So hold on, 25 or 75. So you can see that channel. So we're just drawing the channel here from the 115 low, and I'm using the 124 low, false breaks over here, and we're extending it off the high from 1.8, excuse me. And with that, we're just looking at trading between these levels, kind of a chop fest, right? Looks like to me like 126.90 is a level that's going to be important in euro yen. Get up to that level, you'd also be in the rate, the range of the 12.27 high, which is right before kind of the, yen went on a tear. Also going to be up in the area of that low, right, from 10.26, so the October low. It's a lot, not surprisingly, like dollar yen, because euro dollar hasn't really moved a whole lot. So the levels are going to be pretty much the same. Remember, we're looking at the October low in dollar yen as a spot, and the 12.26, 12.27 high as a spot. Well, it's really the same when it comes to euro yen, right? So I think that you probably move up towards that level, before you get potential for kind of a deeper pullback. And we had a question here from Aurelian asking, did you see a gap this past Sunday on Aussie of about 5 points? So 5 pips, I'm guessing, is what you're asking here. Let's see. So if I go to this chart here, all right, so Aussie closed last week at 71.28, opened at 71.30. So I actually have a 10 pip gap. And Kiwi closed last week at 68.50, opened at 68.63. So I actually have about a 13-point gap in Kiwi. Okay. So the answer is yes, but it's a little larger on this platform. All right. All right. So that's it today. Everyone have a wonderful rest of your week. Things are starting to get maybe a little more interesting now that the S&P is traded up into, a level and actually traded down for a day, or 2 days, 3 days, gasp. So yeah, these, pay attention to that level over here. The low from last Thursday is a biggie, in my opinion. And after that, we'll see. But big spot there. Okay. All right. All right, everyone. Have a great rest of your week. Thanks again for joining me here with the Midweek Strategy webinar. Jamie Setley here signing off. All right.